Joining us for a look at the day's market moving news is Cremen from AdviceWorx. Thank you so much for your time, Caroline. Pretty interesting moves that we are seeing there in the markets, as we are seeing a sea of red on that front. Is it nervousness after the U.S. non-farm payrolls in terms of what we could see coming out of the Fed tomorrow and maybe from the inflation data?
Yeah, I think right at the moment there's a lot of factors playing into it. So in South Africa, we still kind of up and down about our coalitions or governments of national unity. In the EU, you had those very odd election results that came out, and you've got some kind of conflicting data that comes in and out of the US. So people just don't know which way to go at the moment. And maybe, like I said, markets do not like uncertainty, so we're in the red.
Yeah, indeed. And it seems that markets are really, as you're saying, that they don't know where to go. The labor market in the US also does not know where to go. Let's actually talk about that, because we did have two data points that were out earlier on in the week, job openings and the ADP private payrolls, that, were showing, a labor market that was starting to weaken, to soften a little bit. And then we had that jobs report on Friday. Did that jobs report just trump everything that we'd seen before?
When you actually read through into the figures, there's some very interesting anomalies there. So you saw, permanent job losses, but you saw a rise in part-time. You saw a reduction in employment for, Americans, basically, and a rise in employment for non-Americans. So, it's how do you read that? Right now, this whole immigration thing is actually holding up the American jobs market. It's as strong as it is because you've had this bout of people flooding into the country. But that's not sustainable, and certainly not the way to build a sustainable economy. Yeah. So, again, how does the market read that? Do they take the short-term win? It's all over the place at the moment.
Pretty interesting. You talk about short-term wins. I don't know if what we're seeing in South Africa's manufacturing sector is a short-term win or a significant turnaround. We did have that surprising to the upside for April. Manufacturing production increasing by 5.3% after falls that we saw in March and in February. Even on a month-on-month basis, actually, those figures improved. Talk to me about the growth that we saw here.
They're strong. It's really, really surprisingly strong. And I was trying to figure out when exactly the whole load shedding thing stopped, and we started to have consistent electricity. I have a feeling it might be a little bit before that. If you imagine a business was operating during a time of load shedding, they might have a backlog. So maybe part of that is a backlog clearing and just making hay while the sun shines, while our lights are still on. We can't read one figure, one swallow does not a summer make. True. We need to see this consistently over time. And hopefully if we can keep the lights on to a certain extent, and there's a bit of certainty after the election, after we get a new president, people start to cooperate, maybe that'll become a more permanent thing. But yeah, let's wait and see.
All right. We'll talk about lights on. We saw green lights across the numbers coming out of Premier today. They released their year-end results. We did see top line growth of 3.6%. Also that filtering down to double-digit growth in HEPS. We did see that share price popping 6% there. How did you chew on those numbers?
Yes, it's interesting. So people tend to forget about Premier, but you shouldn't. This Blue Ribbon and Snowflake, which are real household brands. So I saw two things into that. I think first of all, when you actually see revenue only grow about 3.6%, I think it was, and they still managed to grow the HEPS by 17%. That's indication that the company has got things under control. They've got their costs under control, and they've declared a dividend as well. Let's not forget that. But so, yeah, good for the company. I thought, again, in this type of environment, especially when you're catering more for that lower income market, which is stretched at the moment with inflation, to still come out of those numbers is very good. But then again, if you look at revenue growth of 3.6%, it's not great. So it's still indicative of a weak economy.
All right. Well, Caroline, let's get to your stock pick for today. What are you hanging your hat on today?
Well, I'm going to go PayPal. And now fintech used to be all the rage. AI is now all the rage. And last night, after Apple started to talk about its AI initiatives, And also its enhancements to the Apple Wallet. PayPal started to fall. I think it fell nearly 3%. Now it is down 5 years, 43%, but it's up 6% year to date. So is this still a good company? FinTech is still a good theme. The revenue of this company is still growing. They're doing share buybacks. They've got about $15 billion of cash on the balance sheet. Their margins are good. And they're not an expensive tech company. You know, their PE is about 16, their ROE is 20, and they're thinking of, moving into digital advertising, which might bring a bit of revenue there as well. So I think it is cheap.
Okay.
I think it's got good revenue, nice cash flow. If you want tech, a lot of things are very expensive at the moment. I don't think this one is expensive.
All right. Well, thank you so much for your time and for your insights on what has been moving investors' money today, Caroline. That was Caroline Cremen from AdviceWorx.